Well, hello there. Thank you so much for joining on today's video. My name is David Duford. I am the owner and operator of buylifeinsuranceforburial.com. And in today's video presentation, we'll be talking about what the difference is between term life and whole life insurance. So I hope you got your paper and pen handy because we're going to go into a detailed discussion about pretty much everything term and whole life insurance and really how to determine best which of these two particular products is the most appropriate for what you're looking to accomplish. And if you're not sure with that too, that's something I'm going to help you with as well. So let's go ahead and get started. So starting off first with the overview of today's topic, I'm going to tell you a little bit about myself and who I am. Then go ahead and actually define what term insurance is as well as whole life insurance too. Then we're going to go into what some reasons are, common reasons that somebody would buy a term life insurance policy, and do the same thing with describing why somebody would buy a whole life insurance. I'm going to show you a quick pricing difference, as many people are wondering what the costs are associated with these kinds of plans, because sometimes it has a big impact on what kind of policy you buy after all, so I'm going to show you the difference there. And then give you some factors to consider before you decide upon which particular type of policy and which particular type of company you end up choosing, and then conclude with how I can help you in the process of doing that. So, let me introduce myself. My name is Dave Duford. I am the owner of buylifeinsuranceforburial.com. I have been a licensed life insurance agent across many states in this fine country since 2011. I've helped over 1,500 families with a variety of life insurance needs, from all things term and whole life insurance. I'm also a published author. I have published a best-selling Amazon book in the final expense niche of life insurance called The Official Guide to Selling Final Expense Insurance. Check it out on Amazon if you're interested. And also, I train agents and take them into my agency to help them become life insurance agents as well. I have over 400 agents that I have helped over this past several years across the country to become life insurance agents as well. I'm also married. I have 3 kids, and the 4th one's on its way. At the filming of this video, my wife's in her 11th or 12th week of pregnancy, barely hanging on. So sooner or later, that bad boy will come out. But it's going to be a little longer than sooner, as you know. So anyways, let's go ahead and get started with today's topic. So the first thing we need to clarify and define is what exactly is term insurance. You've probably heard of term insurance, probably heard of life insurance, and you're kind of wondering exactly, explicitly, what the main points of how the plan works. So let's talk about that. So term insurance, the best way to describe it is that it's temporary life insurance coverage. So it's something that lasts only for a particular period of time. It is not the opposite of that, which would be permanent. So again, one way to think about this is think term, short for terminating coverage. So any kind of term plan you get is going to terminate, not including any what riders may do to help extend the policy or transition it, or options in the policy that may affect the kind of coverage you could have after the term ends. But beyond that, the term is just for a term of time, and it terminates if no action is taken to prevent it from terminating. So there's different options at the length of the coverage you can get. A lot of that just depends on your goals and what you're looking to accomplish, but most commonly what we see and what we help people with, generally speaking, are 5, 10, 20, and 30-year term insurance plans. It can be more, I've seen, that sometimes not really, they can be less. Sometimes there's those options, and a lot of in-betweens. So it just depends, again, upon what the particular circumstances. We'll get into that more in a minute. But with term insurance, premiums and death benefit coverage generally remain level during the term. So, for example, if the term on the policy is 20 years, your premiums and your death benefit are going to be the same throughout that 20-year period. What happens after that could change, but what matters most is that you understand that term insurance exists for a predetermined period of time, and generally speaking, the premiums and the death benefit remain the same during that premium and period of time. So now let's go ahead and define whole life insurance. Whole life's a little bit different. It's still life insurance, just like term insurance, but just a little bit different. So let's talk about that. So whole life insurance is really what one would call permanent death benefit coverage. There is no term to it. Okay, it lasts your whole life. Whole life insurance, it lasts your whole life. Hopefully that little connection makes sense. So whenever you hear whole life, think, well, it's going to last forever as long as I live under certain conditions that you pay the premiums. Of course, we'll get to that in a minute. The payments can last for life. So if you get what we call a final expense plan, you're going to pay that thing most likely until you die. Or it can be payments that are limited and paid up at a future date while maintaining your coverage permanently. So a lot of whole life plans are designed to pay for a set period of time, many times 10 years or 20 years. And once that amount of premium has been paid in, the continual premiums to keep the policy are not required. And now you've got, if you have whole life insurance, permanent protection that's paid up that you don't have to worry about any future premiums for. So the way to think about that, to kind of explain a little better, is if you think about getting a car, right? You got a 5-year loan, let's say. Once you pay the loan off, it's your car. You still get the benefits of keeping it. You can drive around, go to work, see your friends, do activities, but you don't have a payment, but you still have the benefits. That's how a paid up plan generally works. So that's kind of how to think about it like that. You pay your plan up, you still have it when you have a specifically what's called a paid up whole life plan. The premiums and coverage are contractually guaranteed. So on the outset of taking the plan out, there's guaranteed amounts of coverage and guaranteed premiums that are written out inside of the plan for the extent that the policy lasts, which is designed for your entire life. It also has a cash value account associated with the plan. This is something that whole life has that term insurance doesn't. And that cash value plan can be used for all sorts of things, which we'll talk about here momentarily. So shifting back to term insurance, under what circumstances would somebody even consider buying a term insurance plan? So term insurance is best purchased and most commonly purchased for temporary obligations. So when I say temporary obligations, think of things that you have to fund or obligations that won't last forever or expenses that may not last forever. But you need some kind of assurance, a backup plan in case you were to die and the income from your earnings cease to exist. Therefore, those obligations still have to be paid for and you need something to protect that. That's where term insurance comes in handy on those temporary type of obligations. So let me give you a couple of examples to better paint this picture. So first example, a very common one is mortgage protection. You move into a new house. Part of that process is you take out a mortgage on the house. And now you owe $100,000, $200,000, $300,000, whatever the number is. Well, that obligation, if you die, is still owed. Well, that's a problem if you are the single source of income in your family, or even if you both work and one of you of the spouses passes away, it's going to affect the capability to maintain your lifestyle and pay payments like a mortgage. So that's where mortgage protection coverage comes in. It's a term insurance product. It's designed to, when you die, pay a lump sum equivalent to whatever the outstanding amount of the mortgage is that's due. So it's very effective, and it's a very common reason why somebody purchases term insurance to begin with. Also, debt coverage. So when we say debt coverage, think of any kind of personal or business loan that you may have. Maybe you're a small business owner and you've funded the operations of your business with something in the form of a debt, and you need to have some sort of indemnification to the bank or whomever's loaning you, and so you can get a life insurance policy, usually a term insurance policy, to last the extent of that loan as you pay the payments back regularly in order to cover it if you end up dying and the outstanding loan is still due and now the bank has an amount that's covered. So that's one reason you can use term insurance. Also, income replacement. This is a pretty simple concept, kind of along the same lines as a life insurance plan to cover your mortgage. Well, you as a professional person who makes an annual income needs to replace that income because things from that income are purchased and invested in that are necessary for the continuance of your family's welfare. So having a term insurance product while you approach and save for retirement and get ready for Social Security is important to protect that income because, again, that income is used to sustain your lifestyle, fund your retirement, college expenses, that kind of thing. And so it's important as a working person, blue collar or white collar, to have something in place. God forbid you died well earlier than expected. And term insurance is the solution to that problem. Also, retirement planning, kind of along the same lines. You buy a term insurance policy because a portion of your income, hopefully, is being invested into some sort of retirement plan, well, that portion of the income is gone when you die. And so a term insurance plan can help fund retirements in that regards. And last here we have business-related risks. So a lot of people in the business world purchase a term insurance plan to cover very important people that work in their business. Maybe you're a small business owner and you have a single salesperson who has all the connections, who has people in place that are very important to the success of the firm. Getting what's called a key man policy is a great idea to protect the solvency of your business if that person were to pass away. That's one idea to do it for, to buy term insurance. And so why would one buy a whole life insurance plan? So some similarities as it relates to why someone would buy term insurance, but a few marked differences. So let's go into those a little bit. So whole life insurance is commonly purchased to protect against permanent obligations. So think of any kind of expenses that will absolutely be there no matter what length of time that you live, whether you die early or die later in life. That's kind of the rule of thumb. So examples include with whole life insurance, funeral-related expenses. We all will die, and there's a cost to doing that. And so a permanent policy is commonly used to fund and pay for funerals or burials or cremations, that kind of thing. So that's where one would buy a whole life kind of policy. Other final expenses. Maybe you have a legacy that you want to leave behind to your grandchildren, or maybe there's a death benefit that you want to leave to your spouse or somebody you love, that no matter under what circumstances you die, you want it to be there. I had an agent of mine whose father left him a $250,000 death benefit because that was part of his legacy he wanted to leave to that particular, to his son. So that's something that happens a lot of times. Also, retirement planning. Many people use whole life insurance products to supplement the retirement income, as it does provide some advantages associated with the cash value. So there's some retirement reasons to purchase it. Also, estate planning for those with businesses and you've got a permanent obligation, usually estate taxes and stuff like that, and you need a policy that won't cancel because of health or age and won't have a term limit to it. Whole life is a good idea for that. And also penalty and tax-free access to the cash value of the whole life plan. You can actually take loans out against your cash value versus going to a bank, and you don't need to qualify or have good credit or anything like that to do so through your whole life plan. So these are some of the reasons, basic reasons, nothing too super detailed, but just wanted to flesh out some ideas as to why one would purchase whole life insurance. So here is a quick table I put together on pricing differences between term and whole life insurance. So the key thing I want to describe here and make sure you understand is this specifically is for people who are 35 years old, female and male non-smokers. I didn't want to go into too detailed of a difference. You may be much older than this, and yeah, the prices are going to be higher. But the key reason I put this chart up as I did is I wanted to show you the pricing differences. A lot of the times I sit down with people and, many times people I see don't have any kind of life insurance whatsoever, and they just don't know what to expect as far as pricing differences. So the key thing I'm going to show you here, if you take a look at this male 20, 30-year and whole life differences for $500,000, you can see there's a dramatic difference in price. Whole life insurance is much, much more expensive, whereas term insurance is much, much less. So one of the reasons people purchase term is they like the idea of permanent protection that doesn't cancel, but when considering pricing, it just doesn't make sense for what their budget is and what they want to accomplish, which is fine because some coverage is better than nothing. We'll talk about last factors to consider. But the point I'm driving home here is that you got to assess the differences here. And this dramatic difference between whole life and then the 30 and 20-year terms, which are pretty common term policies to buy, are pretty much across the board at all ages. Whole life's a lot more expensive by several notches. And so in that case, many people get term insurance. So just bringing that to your attention in your process to figure out the difference. One of the biggest differences is cost, and that has to be considered, of course. So as you can see, very dramatic. So Some last factors to consider before choosing what kind of life insurance you should buy and the determination of what the differences are between whole and term life insurance. So first of all, what are your goals? This is something that's really important that you have to establish. I mentioned some ideas and reasons why people purchase those life insurance options earlier, why people purchase term insurance options, why people purchase whole life insurance options. My recommendation is use those as a springboard if you already don't have in mind why you think you need to buy life insurance. Because you need to establish what's most important to you. Where are you at in your career? What is it exactly that you want to accomplish? What are the problems that if you die would manifest itself in your business, in your personal life, in your family's life, in your passing? And take those issues, those challenges, those problems, and then compare it to the description of the life insurance options I described, and more or less come up with a better idea of what kind of policy would be effective for you. So establish those goals based on your particular situation. It's a good idea also to talk to an agent, someone like myself, to help you figure out and further define what those challenges are, so you have a third party giving you their opinion to help better solidify that. Along with that process is matching the product with your goals. Okay, so this is really, really important. So once you know what your goals are, you know what you're trying to accomplish, you need to make sure you pick the product that best fits the goal you're trying to accomplish. If I am looking for an income replacement policy if I pass away, so my spouse will have an ample amount of money to go back to school, get educated, take over my business, fund my kids' college, and live comfortably in that whole entire process of learning. And I'm just looking for this as I approach, my eventual point of retirement, and I want something to cover if I don't make it to retirement so that there is money for all this. Then a temporary policy, in my opinion, is fine. It's good enough. Yeah, it would be great to have permanent coverage, but maybe your amount of affordability just doesn't make sense for taking out something of that magnitude. Whereas having a larger death benefit at a lower price is, which is, again, many reasons why people purchase term insurance, and it's fine. So match a product with your goals, whatever it is you're looking to accomplish, and, understand, you make sure you get the pairing of it together. That's so important. Make sure the premium is an amount you can easily afford. Okay, agents don't like to admit this, but affordability is key. It's the best policy to buy is the one that you can easily afford, one that's not going to break the bank. You obviously need to be diligent and buy a plan that's something that's going to do the job that you need it to do. But you don't need to spend too much on life insurance either. Part of this process is working with an independent agent. Again, someone like myself, I shop different carriers to try to find you the best price and coverage so you don't spend more than you have to. But again, it comes down to affordability because you really want to keep this thing for the extent of the policy and how long it exists. You don't want to lose it because something happens. Now, some insurance is better than nothing. I mentioned this earlier. It's important to have something, okay? We all would like to get the whole life plans that are big policies and know that there definitely is going to be a huge death benefit no matter when you die. But if all you can afford is a 10-year term, that's perfect. Start with that. Even if it's less coverage than you think you'd like to have, get what you need, and a lot of that depends upon affordability. And you can always add more coverage later. A lot of people delay on buying life insurance because they can't get this big amount in their mind that they think they should get. It's an all or nothing ordeal, and it shouldn't be. Buy what you can afford, add more as your income increases, as your capability allows for it. Health only declines with age, so you need to really get some coverage as soon as possible. I mean, look, you're probably the healthiest you're ever going to be today. Nature has a way, and time has a way of reducing your health. And it's incumbent upon you to get covered, to get qualified for it while your health is still good. Because tomorrow is not promised. And tomorrow you may not die, but you could be in worse health. You could get hit by a car. You could be dramatically injured. And that immediately affects your insurability. So don't take your good health for granted. Use it as a reason why you should buy today. And get a plan in place today. You don't need to delay anymore. Even for all the other reasons I mentioned, you need to get something on the books because if you're healthy, take advantage of it now. Don't be like a lot of people I see that wait until the final second when they can't qualify for anything. So Some final steps. I do hope you enjoyed this particular video. Again, this is a very basic description of the differences between term life and whole life insurance. I didn't want to get too bogged down into the minutia and the details and then bore you and put you to sleep. You don't want that. You just want to know the facts, and that's hopefully what we achieved today. So if through this process you've gained a better insight on what it is that you want to accomplish, what kind of life insurance is the kind that would be best suited for your goals, and you're looking for someone to get a quote from, I need to offer my services to you, of course. That's part of the reason I'm doing this video. If you feel like you need a quote on life insurance, allow me to assist. You can give me a call at 888-626-0439, or you can go to my website, which is buylifeinsuranceforburial.com. Send me a message for a free, no obligation quote, or just give me a call and I'll run some numbers, see what we can do, and see what you can qualify for. I'm an independent agent. I shop the most competitively, highly rated carriers to figure out who's going to give you the best value for the kind of coverage that you're looking for. And like I said, if you need some extra help to figure out what kind of plan is right for your particular goals, look, I'm more than happy to help you out. Let me help you out. I've been doing this since 2011, and I'm more than capable to help you in the direction that you need. My name is Dave Duford, and if you like what you've seen, please give me a thumbs up and leave a comment in the box below. And drop by my website, buylifeinsuranceforburial.com, or give me a call, 888-626-0439. Thank you so much. Y'all take care.